Good evening, everybody. I just finished eating me some carrots. Y'all go ahead and pull up in here while we get together, while I get myself together, while I drink me a sip of water, right? I want y'all to look at this chart right here. Let me blow it up, put it on full screen, right? I want y'all to look at this chart right here. And if there's anybody who has ever told you, man, get off them intraday charts. Don't be looking at the charts day to day. That's just a bunch of noise. I want you to look at this chart. If you've been tapping in, if you're an OG Spider Gang member, I want you to look at this chart. And I want you to literally say this out loud to every hater. I know they ain't in front of you right now. And especially if they are in front of you, I want you to look at them and say, shh, I'm trying to listen to the noise. And why do I want you to say that? Where did the market close today? Where did the market close today? Right? Before this day even got here, and any other time when we be talking about high impact news events like CPI, FOMC, yada, 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 yada. What do we always say? We say, what can somebody please put in the chat what we always say going into big events? What do we say the market's gonna do? While I sip me a drink of water. Can somebody put it in the chat for me, please? What's going on here to learn the chef? Buenas tardes, Valdez. Buenas tardes. Equilibrium before big news. Seeks fair value. Price goes to equilibrium. Where did price close at today? Right? Where did price close at today? This is the last candle. If I put a line right here, right there, that's the last candle of the day. Right there. Right? That's the last candle of the day right there. Right? This is Friday. Right? This is Sunday. This is Monday. This is Tuesday. And where do we land? Right there. We closed at 41.34.50. In equilibrium, as you see right over here. Let me make it big just in case you can't see it. In case you can't see it, I'll just blow the screen up. Right there. Equilibrium right there. 41.24.25. One tick away from equilibrium. One tick. I don't have a crystal ball. I don't own a crystal ball. I didn't make these concepts up. I didn't teach myself how to, read this. It was given to me by Michael J. Huddleston. I put in the work to just study the market, figure out what the market tends to do at certain times. And people always say, you can't predict, you can't do. I was listening to ICT. I don't know if it was a Twitter space or a YouTube video. I got a lash in my eye, right? and he was talking about how people say you can't predict the market. And he was like, it's your job to predict the market. As a trader, it's your job to predict the market. And I was like, you know what? He's absolutely right. You know what I'm saying? I've been dilly-dallying around with the market since early 2020, right? And I've always been in the mind frame from like the old school investors and traders. You know what I'm saying? They be in your ear like, it's not about timing the market. It's about time in the market. You can't predict the market. All of that intraday stuff is noise. That. When I was, matter of fact, when I was in S12, I was like, Kiki, why in the world are you on 1 minute charts? That's foolishness. Why are you on 1 minute charts? Right. Because I was ignorant to the fact. Hopefully my internet not messing up. It's showing me that it's messing up. I was ignorant to the fact that price is fractal. Whatever happens on the 1 minute chart happens on the monthly chart. It just takes longer for it to play out on the monthly chart, but it's doing the exact same thing. Then the market has manual manipulation in the form of high impact news events. How do you know that? Because in front of high impact news events, the market just so happened to seek out equilibrium and slide to the right. Slide to the right. How long have I been saying price moves to equilibrium and slides to the right? I've been saying that over and over. And you know why I've been saying it over and over? Because whenever CPI come out, whenever we have FOMC minutes, whenever any high impact news things come out, the big boss dogs, when those come out, the ones that stop the market, when Roman Rome gonna talk, when the Fed's gonna make a decision, when CPI coming out, the big market movers, the market just so happens to seek out equilibrium and slide to the right. Remember when ICT was talking about when he was going over the new week opening gaps, right? Remember when he was talking about the new week opening gaps, right? How is it that price came from this new week opening gap up here, right? Around this time frame of early May, right? This like the beginning of May right here. This beginning of May right here came all the way down to this new week opening gap right here, right? And then it came back up to a heavily congested area of new week opening gaps, right? And notice, it stayed there for a little while there. It stayed there for a little while here. And it stayed there for a little while now. But it just so happens that it comes to an area of 1, 2, 3, and now 4 different new week opening gaps, all in the same place. And when he said, and when he pointed out the fact that he was like, how was I able to say that today was going to be a consolidation day, right? And he said, because price had come back to an area where there was multiple new week opening gaps very near each other. And what did price do? It just hung out, right? We got 2 new week opening gaps right here. Look at that. Price just hung out in that spot right there, right? And then when it pushed down, it came down here. It bounced off of these 2 new week opening gaps and went right back up there to those 2, right? And then today, what it do? It came down and hung out right here at these 2 all day long. Just hung out right there. Right, most of the day it stayed inside this one new week opening gap right there, and that one there is where does that go back to? The top one here, the top one is the smaller one, right? So the top one is the smaller one, and the top one comes all the way back over here to mid-February, right? Mid-February, Friday. What is that? Friday the 10th to Sunday the 12th. Back in February. That's the smaller one at the top. That's the one that where it looks dark right there, because the smaller one is ending. So it spent most of the day consolidating inside the one from February right here, consolidating inside this one here. Poked out of it a couple times, but look at here, just sat right there on top of equilibrium all day long. 41, 34, 25, just sat on top of it, wick down to it. Bodies of the candle stayed inside the new week opening gap. Wick down to it, inside it, came down and closed right near equilibrium. Wicked under it, pushed back up, got above the new week opening gap, took out a little buy side, came all the way back down. Just hung out right there. So just shh. We trying to listen to this noise. You talking too loud. Be quiet. Shh. We trying to hear this noise. You know how people say block out the noise? We listening to this noise. Shh. Stop talking so loud. I can't hear the noise. I can't hear the intraday noise. What's going on, man? Good evening. Good evening. Good evening. Good evening. If this is your first time tuning in to Tim's Tidbits, please allow me to say welcome. If it is not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty of the heartiest well thank yous for always tuning in to Tim's Tidbits, hanging out with moi, my homeboy back here over my shoulder, Spy, and that beautiful young lady back there in the corner, that's my sweetie. Yes, she is. If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Algo's Internet every single day, Monday through Friday. That is 9 a.m. Eastern Standard Time, 6:30 p.m. Eastern Standard Time, and I talk about the price action, dealing with the S&P 500. Normally talk about the futures and the SPY, but we talk about just the market. Why? I want to help somebody like you get your aha moment when it comes to trading, investing, all things stock market. I want you to get your aha moment when you understand that noise. When you be like, hey, we're getting ready to come up into CPI. Where's equilibrium? Price is going to go there. I can take an opportunity to catch the wave, or I can just let it go there and chill out. It's not going to be a big fuss. It's going to be a little consolidation. Normally, it's not very volatile, very meh. It's just trying to get back to fair value so that when the numbers come out, it's at a spot where it's okay to buy and it's okay to sell. That's all it's going to do. With that being said, thank you for joining again. Let's get into it. Now, let me share the chart this time. And when I share the chart this time, I'm going to remove these new week opening gaps and I'm going to put this on daily candles. And we are going to go over here, bring your attention. Please divert your attention to the far side of the screen over there. There's a line on this screen too. There's a line on that screen too. Oh, because that's the daily candles. Never mind. If you see where my mouse is hovering right now, it's hovering over a ticker symbol. That ticker is the SPY. What is the SPY? The SPY is the ETF that tracks the performance of the SP 500. Around here, we call it SPY Link. We even wrote a song for it. You want to hear it? You want to hear it? You do? Well, if you never heard it, ooh, prepare to be serenaded. If you know the lyrics, by all means, join me. On the count of 3, Eins, zwei, drei, sing, Spilene, where you at, baby? Go. Hey, how you doing? I'm glad you. Wait a minute. There's a line on Spilene too. There is a line. There is a bomb in Gilead. What in the haberdashery? Did Spilene come back to equilibrium too? Did Spilene come back and sit on top of equilibrium too? Pause. Did Spilene come back to equilibrium too? Say it ain't so. Say it ain't so. I cannot say it ain't so because it did what it did. If you remember, we ran some fibs and said equilibrium was 410.93. I mean 410.68. And then we closed at 410.93. Right there. Right around equilibrium. So tomorrow is CPI at 8:30. At 8:30, the fireworks will go off. And then after the fireworks go off, then the market will open shortly after that. And we will see if we gap down or gap up. Now, instead of walking through the price action tick for tick today, we are going to go look at the ES futures, look at the Dow futures, and look at the NQ futures and see if we can see what the algo will possibly attack come CPI. Let's do that, shall we? And no, we don't have a crystal ball. We're just going to look at the price action and determine what will the algo have the opportunity to do so that we, as day traders, can be prepared once it acts. Once it acts, we can be prepared to stalk our setup and pounce. We shall not sit there and try to guess. We're going to wait until it acts, and then we're going to be prepared with our strategic plan. Let's go to the ES, shall we? Starting with the ES. Matter of fact, we're going to do the ES last. We're going to start with the Dow. The Dow has a line. I didn't put a line on the NQ, but look at the Dow. Where did the Dow close? Where did the Dow, did the Dow do the same thing? Oh, my Lanta, the Dow did the same thing too. Let's go check the ES. I mean the NQ. The NQ did something different. The NQ did something different. What did the NQ do? The NQ was leading the pack. The NQ is much higher than everybody else. Is this the relative strength leader? The NQ is way up in a premium. But we already knew that. We knew the NQ was already the relative strength leader. How do we know that? Because the Qs have been running all year ahead of the Dow and the ES, my dear. Now, let's start with the YM. Let's start with the YM. We are going to look at, we're going to look at buy side and sell side and buy side and sell side to see what we can possibly attack. So that's the daily high. That's the daily high. Box top, box bottom. Right? That's a weekly high. That's probably a weekly high. Let's see. Okay, that's the high from this week. That's from Monday. Last week's high. Last week's low. Yep. Both of those are really, 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 really far away. Gonna go to. Gonna check. Mark out this. What did I just do? Just did the wrong thing. What we're gonna do? Put this right here. Okay. If you don't know what that is, that's consequent encroachment of that weekly wick right there. Okay. Consequent encroachment weekly wick. All right, now let's go down to some daily. We already did daily. We already did daily. Nothing on the daily we want to mark out. All right, that's a weekly. Weekly consequent encroachment. All right. Daily SIBI. Got a daily SIBI above price. Got a daily SIBI above price, above the weekly high. I be forgetting y'all, like it be looking big. It be the font be like legible to me, but I be forgetting. A lot of people be watching on their phones, so they be like, man, I can't see them letters. I be like that too. I be like, man, why they got them little old letters on that screen? Okay. Okay, we got through that. We initially got up above mean threshold of this daily breaker right here, and now we kind of hanging out right around mean threshold of this daily breaker. The mean threshold of this daily breaker is right there around equilibrium, right? And that's a bullish breaker. And we're right around, we close, yes, just below, because equilibrium was like right there at the daily low. So we closed just below the mean threshold of that daily breaker today. All right, go down a little bit more. Again, we're just marking this stuff out so that we can have a game plan for tomorrow. And the reason why I'm looking at the Dow, the ES, and the NQ, so we can have a overall viewpoint of like all three indexes. What we are going to see. So on the 4 hour, we have sell side below that weekly wick. We got sell side below the weekly wick. sell side below that consequent encroachment of that weekly wick. Um, there's a fair value gap there. Not really worrying about the fair value gap here in this case because it's right at this low, and if CPI gets heavy to the downside, I would like this consequent encroachment of this weekly wick would be like the first PD array, and then like this sell side, you know what I'm saying? This is the first sell side on the higher time frames, like the 4 hour. And then with the current week's high, right? We got this imbalance, right? We got this imbalance. The imbalance here is like this daily imbalance is like the predominant force to the upside outside of this buy side up here, right? So that like how we got just a single low right there to the downside. So that's why I just marked out that low. And then to the upside, you know what I'm saying? We're going through this high and that high to get to this imbalance. You know what I'm saying? Whereas this imbalance right here is right there at today's low. We there. We're pretty much there. So I ain't bothered. I'm just marking out that wick because that'll be like the first target, and then the sell side, right? To the upside, if CPI took off, right? So let's see what price done. We came up, got a break here, right? Rejected off of it, came down below it again and rejected off of it here. So news aside, the draw right now on the Dow is here. Right. Yes. News aside, the draw is there. Right? News aside, the draw is here. So if the draw is here, right, we've took off, breaking market structure. We came back down. Did we get institutional order flow entry drill here? We didn't get institutional order flow entry drill, but we did come back into the open of the breaker. Let me see. The open of the breaker is at 33,462. The low of today is 33,539. So we got into the wick of this breaker right here, right? We got into the wick of this bullish breaker, right? So we came down into the breaker and rejected off of it heavily and then pulled back to equilibrium. So price is still moving bullishly, right? And the draw is still over here. Mind you, we have this high, right? This could be the draw, because this piece of the price leg is what actually took out the low, right? This piece of the price leg right here from this 2 p.m. SIBI from May the 3rd all the way down to this 10 a.m. calendar from May the 4th, right? This piece of price leg is what took out the liquidity over here, right? Now, this could be the magnet, but in the overall scheme of things, this is the grandma, right? That's the grandma. That's what birthed this low. That high birthed that low. That high birthed this low. then that high, birth that low, then that high, birth that low. So that right there, that's the see the baby, the mama, the auntie, the grandmama. That's great grandmama up there. Yeah, great grandmama up there. Y'all don't start calling them grandma, great grandmas. Okay, so that's the draw. News aside, the draw is to the upside, right? Now, CPI comes out, right? Is manual manipulation, right? What do we have to the downside on the Dow? Right? We got a BISI, right? We got a 4-hour BISI, right? And I'm just looking at it on the I'm not going all the way down to the hourly and all of that right there. I'm looking at it on the higher time frames, right? We got a 4-hour gap down here, right? And we got sell side down there, right? It's manual manipulation, right? So let's say they manipulate it to the bottom with a news wick that comes down, fills in this fair value gap, and rejects off this consequent encroachment, right? Come down, reject off that consequent encroachment. How can you use that, right? We'll get into how to use that on the when we get to the ES, right? So, but just be mindful of how the Dow is moving, because if the Dow is opposite of the NASDAQ, then the ES gonna be the red-headed stepchild in the middle. That's called a divergence, right? What? DeAndre, we had a conversation about Six Sister earlier today. Go watch the live from this morning. Now get off my screen. Be mindful of divergence. Be mindful of divergence. NQ is already up in a NQ already up. NQ already done did it take it out? Nope, came close. Did not take it out. Came very close. NQ, I was gonna say the NQ already took out the buy side, but it came very close to taking out the buy side. The NQ has been running like a Mack truck. NQ has been running like a Mack truck. Okay. NQ weekly. Okay, NQ consequent encroachment of the weekly wick. It's down there. All right. So the buy side is the daily high. Pretty much close enough government work. Oh, that's the weekly. I'm sorry. Let's get on the daily. Yep, same thing. This week's low is today's low. This week's high is close enough to the high. Okay. We got an imbalance below. Right. Daily fair value gap below. Daily BISI. Just like did EQ have a daily BISI? I mean the ES, I mean the Dow. And then okay, so Got some sell side way down there from May the 4th. May the 4th be with you. Last Thursday. May the 4th was last Thursday. May the 4th was last Thursday. I said buy side, sell side. I'm sorry. Okay. So we got a daily volume imbalance. We done put a body over across that right there. So that can be some support up under this fair value gap and this wick. So if price came down, same thing if they use price to come take out, if they use price to come and take out the downside imbalance, again on the NQ, draw us to the upside. Again, the NQ has been bullish. The NQ, we already know it's been bullish because it's been leading the way. We were consolidating, came down below the consolidation, ran sell stops, filled in this daily BISI, took off, right? Got a breaking structure here, taking out the short-term highs, left a BISI, pushed up, got above the highs here, right? Brought the draw down this way, right? Getting above that high and rejecting off, brought the draw down here, came down, filled the imbalance, and then rejected off, right? Had the rejection there. Then the next day had huge rejection. So that rejection off of this discount PD array, failure to get to the sell side, brought the draw back up here. So the draw is there, and we just came to it yesterday. And then today we opened up, sold off, and we came down right there to this imbalance. So the NQ is holding very, very, very strong, very strong. Didn't even make it all the way back down to equilibrium of this leg down right here. Right now, mind you, Friday we pretty much erased this entire leg. On Friday we went almost to the high. So Friday we pretty much erased that entire leg right there. So the draw is here. So this is the only buy side for it to attack, right? Which we're almost there. And if we go to towards sell side, we have an imbalance that it can fill prior to attacking, right? If it wants to continue up, but it wants to manipulate down, hit us with a Judas swing, then go up, right? We can come down, feel this is the only imbalance down here to fill, come down. If you get a rejection off of this new week, this consequent encroachment of this right here, there's where you can start stalking. If you trade the NQ after CPI, if it wicks down and takes out, what's that? If it wicks down and takes out, fills in that imbalance on the news candle. Got some mouth. Lint. Probably from that paper towel. That's probably where it come from. So yeah, news manipulation. If it shoots up, takes out the buy side immediately. If we get a strong rejection, then you can be looking for a short to come back to this imbalance. News manipulation, come down, feel the imbalance. If we get a strong rejection off of this consequent encroachment, you can look for a long to attack the buy side, right? If we don't get strong, just get heavy manipulation down and get the continuation signal, don't get rejection off of the consequent encroachment, you start looking for shorts to go toward the sell side, right? If we get strong manipulation up and don't get the rejection, you can just look for longs to, you start looking left to see what you can attack. We have a high here right next to a volume imbalance, right into Sibby, right into a Sibby. Right, you just start looking to the left for what you. If we attack by side and don't get a rejection, continuation, got a Sibby above the buy side with another high right there. A high combined with an imbalance. Very tasty to the algo. Swing highs and swing lows combined with imbalances are very tasty for the algorithm. ES. Let's look at the ES. So ES 4105.75. Oh, there you go. 4105.75. What is the ITL? 2 ITLs, possibly 3. What in the world is an ITL? Power moves don't get banned with all these doggone with all these initials. What is an ITL? I can't even think. Talking about an ITL WIC discount. There you go. Oh my God. Get off my live. I already told y'all I don't be focusing on intermediate term lows and intermediate term highs, and I don't focus on all that. Man, when I told y'all it's certain things that I just tune out when Michael be talking because it's too much terminology. That's too much terminology. That right there. Put that in that category. There's a lot of stuff I just tune. I'll be like, Michael, shut up. Because it's too much terminology. You get so focused on like, is this an intermediate term low? Is this an intermediate term high? Is it you can't even see the forest because you're staring at a tree. You know what I'm saying? Shout out, Michael. I just want to know where the money resides. If you use that and it helps you, by all means, don't stop using it on my account. Don't stop using it on my account. But me personally, swing high, swing low, swing high, swing low. I don't care if this is intermediate term low, intermediate term high, short term low, short. Man, I don't care. What's the draw on liquidity? That's all I'm worried about. What is the draw on liquidity? What is the draw on liquidity? That's all I want to know. I don't care if it's intermediate, long-term, short-term, cat mama, cat daddy, Rumpelstiltskin. There you go. It makes sense to you. There you go. Keep on keeping on. If it makes sense to you, do what you like. Somebody do what you like. Got a Bissy, daily Bissy, below price on the ES. Daily Bissy, below price on the ES. What that? Sorry about that, y'all. I thought I heard my family leaving, and then I heard voices in the house. So, but my wife said they left the TV on. So, anyway, yes, I muted that. Okay. So, ES, same thing. Draw is up here. Barring all news, barring all news, draw up there, right? We took out this buy side right here, rejected off of it, brought the draw down here. We came down, took out that sell side, rejected off of it, started to push back up. Now we've consolidated, well, we've settled right at equilibrium, as we already saw from when we first came on, talked about price move to equilibrium. Boom, we're at equilibrium right now. So to the upside, right, to the upside towards the draw, we have a SIBI. We have a SIBI to the upside. Okay. Do anybody have a problem beside me? Like when I click on doggone trying to highlight the thing, it don't be want to act right. Okay, we got a SIBI above this week's high, right? The 8th. Yes. We got a SIBI resting above this week's high, right? This is today's high. The y'all can see that. I ain't gonna insult nobody intelligence, right? So we closed very near the low of the day, right? We closed very near the low of the day. So barring any news, right? Since we closed like near the low of the day, I would like to see price, come down, take out yesterday's, which is today, but yesterday's sell side, and then start to push up, right? Typical bullish price action, right? Because the draw is up here, barring all news. I would love to see price come down, reject off this sell side, you know what I'm saying? Maybe even come to consequent encroachment of this fair value gap, even get down and completely fill it in, start to move up. Now, with it being CPI, what can exactly, it's still the same thing. It ain't nothing really changed from what we talked about with the other indexes already. Here it is on the 4-hour chart. Got a 4-hour SIBI in the same places that daily. We have a 4-hour SIBI a little lower down, right? Let's adjust this to the 4-hour since it's farther down. Right now, the 4-hour is almost complete, so we're not going to mark that one out, right? So that one is almost complete. We almost completed that one today, right? Almost completed that one today. Now, we have a 4-hour breaker, right? So we got a 4-hour breaker. I'm just going to mark the high of the breaker. Breaker high, bullish breaker high, right? Just marking the high of the breaker right there. So we got the high of the breaker, mean threshold of the breaker is at the low of the 4-hour BISI, right? That's easy enough. So manual manipulation coming in, if they use CPI to come down and fill this 4-hour imbalance, right? We got a breaker here. Mean threshold of the breaker is at the low, just below the low of the imbalance, right? So just have that on your radar. You have a 4-hour imbalance, and we close very near the low of the day. So we have a 4-hour imbalance below there. Be looking for the manipulation to come down. Maybe fill this imbalance, hit that consequent encroachment, close above that consequent encroachment on that weekly wick, right? And below that, you have sell side all the way down at 40.62. All right. You got sell side down at 40.62. Now, mind you, this is CPI. So CPI can very easily rip 75, 80 points, right? Let's just go say 75. If it ripped 75 points from, we're just going to use the close of today. Right? We'll just use where we at now because we were right around the close of the day right now. So 41.36, 41.36 minus 75. What? Booyah. That sell side. That's that sell side right there. I just threw a number out there too. I just said 75, 80 points. That's that sell side right there. All right. It can easily, I've seen it. Y'all seen it rip off 75, 80 points, all in a matter of 1 minute, right? That's that sell side. Now, to the upside, right? If we tear off, going toward this imbalance up here, right? Because we got some buy side right at the imbalance. So that's real delicious to algorithms. So you got a 4-hour swing high right there at 41.67, right at this SIBI. So if we rip up there and don't reject, again, we can look for reasons. We can look for long setups. If we rip up there and don't reject, targeting this high here at 41.91 and then the ultimate high at 42.06. Not saying it's got to get there tomorrow, but you know, that's the draw, right? And to the downside, we already talked about the manipulation coming down, attacking this imbalance down below. And y'all already know drill. If it gives you continuation, look for continuation moves. If it gives you rejection, look for reversal moves. I actually came down on the 1 hour. Looking at the 1 hour, we got opposing fair value gaps, right? We left this area right here. So this area right here is potentially balanced price range right there. So looking at the balanced price range on the hourly, right? If we came down and rejected off of this filled in this fair value gap here and rejected off it, right? That'll put us right down into this balanced price range. We have a hourly BISI right here below the low of the below the high of the breaker, right? We have a hourly breaker there too. Below the high of the breaker right there, that consequent encroachment, opposing fair value gaps right there. We're leaving that area. So right here, we left that area, right? If we came down into this down close candle right here, that came to this down close candle, that'll put us right there at that weekly consequent encroachment. You know, so the manual manipulation can't come down here. If the algos are done with this balanced price range, we could very well see a rejection around this area, maybe as low as this low right here, right? But more likely a rejection in this area, this green highlighted area here, because this is a balanced price range, you know, or we just rip through what it was, them 70, put us down here below the sell side. Looking at the upside, if we were to tear off and go up, you know what I'm saying? If we tear off and go up, I wouldn't want to see a very strong rejection from going up. Since the draw is up here, since this is the draw, I wouldn't want to see it tear up to the upside, attacking, you know what I'm saying, this buy side here on, you know, they're on the hourly, that 41.63. That's the hourly. I think that was, what was that, last week's high? Wednesday, May 3rd. No, this is last week's high right there. Yes, Wednesday, May 3rd. That's last week's high right there. That's Friday's high, right? Taking out that high above this consolidation. I wouldn't want to see strong rejection off of this. Getting up into that SIBI up here. If we got up into this SIBI, I would like to see us stay above these highs, right? Get above them SIBIs, get above that SIBI and close above these highs. Then, you know what I'm saying, have a reason. You can come back down into any imbalances down here, but give a strong close up above that, because the draw is here. You know what I'm saying? If we go up there and reject off, me not gonna like that. I will trade it, but I'm not gonna like it. So that's what all they're not inside here. Because if I add it, if I add it over there, the stuff I drew is not going to be.
No, y'all probably like, Tim, why you making that so hard? Cause I don't know, when I put in the ones together, it ain't gonna give me the it ain't gonna give them to me like side by side like I wanted to. Like when I put them in there together, if I add it, it don't be in that other window. Like all the stuff that I put on there don't be in that other window. It'd be like blank. Like if I add it like to the bottom, it'd be like blank. The chart be blank. Yeah, the chart be blank. Anywho, so NQ up in the premium. Like we said before, the NQ in the premium leading relative strength wise. Oh, they're still on hourly. Get on daily candles. All right. So looking at all three of them next to each other. Right. Yes. So, like I was saying before, the NQ up in the premium, very close to the buy side, draws to the top. The NQ and the Dow are at equilibrium, right? NQ and the Dow are at equilibrium. Let's check something on the NQ real quick. Let's check something on the NQ real quick. Run us a Fibonacci tool, and then we're going to change this to quads. Change to quads. Okay. So close the day in a slight discount of the premium. I changed it to quads to see, like from here, this is equilibrium up. So we closed the day just below equilibrium of the premium, right? We closed the day just below equilibrium of the premium. This 13,278.25. That's equilibrium of the premium area that we're in now. We closed it, slightly below that today. So we're kind of hovering around fair value for the premium portion of it. So it is in some type of fair value right now, where it is. And again, the Dow and the ES are sitting at equilibrium of the entire range. That's all I got, man. Do anybody got anything? Do anybody got everything? Anything, should I say? Six sister. My bad. Intermediate lows. I use, okay, power moves, way to make it work for you. Yes. Especially on the higher time frames. Yes. Let's go. Anybody got anything, man? That's all I got. Do anybody got anything? Do anybody any questions? Do anybody got any input? Man, this phone be freezing. Y'all should see how this phone be freezing with my face. I'm out the y'all probably can't see it. I'm out the corner of the screen. Right. Look how it do me. It got me over there like I'm froze, like it froze me right there. Got me. I'm on the edge of the screen, trying to lean forward so y'all can see it. Got me. Why it don't catch me like that? My cousin think he LL Cool J. We got going on, man. I don't see nobody putting in the chat. I guess y'all ain't got nothing, man. Are you making money trading these markets? Get off my live. Get off my live. Rule number 1 of Fight Club. Don't ever ask little Timmy Rogers if he making money. Look right here. Look at me right here. How you say that? Big. I don't know how to say that. Beggable. Beggable. Don't ever ask little Timmy Rogers if he making money. Rule number 1. You've been warned. See that? I just told you was warned. Now guess what? Guess what? Out of there. Out of there. You gone. Just like that. Just like that. Just like that. I told him. Do anybody got anything else? Do anybody got anything else? What I've been doing, I'll share with y'all if I haven't shared with y'all. What I have been doing. What I have been doing lately, since we, you know what I'm saying, we've been like range bound. I'm gonna share this and then we're gonna wrap it up since nobody got anything. What's up, Rose Gold? What's happening? How you doing? Yes, they are very. What's going on, Rose Gold? Appreciate that. What I've been doing since we've been in like a range bound situation, I have every day towards the end of the day, if you look over here to the far side of the screen over there, I have some tickers over here, right? I got some ETFs up there, and you see I got S&P top 10, Dow top 10, and I didn't put NASDAQ top 10 because like the big stocks in NASDAQ are like the big stocks in the S&P. So what I do every day is I just come over here, and I don't like the fact that like how Apple is in the S&P and the Dow, but I can't add it on both over here, right? If I go in and try to add it to this section here, it just shows me it's already in my watch list. And I don't want to create separate watch lists. I just want to do it over here. So no harm, no foul. But what I do, I just come over here every day. I put it on daily candles and I look to see what this stock is doing, right? Is it giving me some type of setup where I can enter a swing, right? And looking at Apple, right? Looking at Apple, it ain't giving me nothing that I want to mess with right now, right? It's kind of in between. You know what I'm saying? So when I glance at it, I'll just keep going. And why do I say it's kind of in between, right? Because if you look at what Apple's done, right? We're coming up. We're just gonna start here, right? We gapped up crazy after earnings, right? Humongous gap up, right? Came all the way up, right? And did not take out this high over here. We did get up above this volume imbalance right there and closed just inside that volume imbalance, right? And then, you know, the next day we just kind of had like an inside day the next day, and then today we open up and we
came back down. You know what I'm saying? We melted back down. You know what I'm saying? Roughly around just below halfway of that humongous day right here, right? Roughly around that right there, CE, right? So we closed yesterday. We closed right. I mean, we opened at it and went up. Then we opened it and came below it, right below, like equilibrium of that big day. But we're still inside that big day, so it's not doing nothing that I'm interested in messing with, right? And I just go through each one of these. You know what I'm saying? Microsoft too. You know, it's just kind of up there doing nothing. So I'm saying all that to say, right? When I go through and see stuff like this right here, like Google, right? For example, Google, right? For example, Google, boom, you come in here, you look at this and you say, hey, that was a strong rejection after coming above this buy side and getting up and filling this imbalance. That was a strong rejection, right? Right. So that right there could be a possible candidate to say, hey, let's see how things go after this CPI tomorrow. I may want to try to get some puts and come aim for these lows down here, right? On Google, because the market just been, ain't giving me what I want. So I just been looking at individual stocks, not saying you got to do this, but this is just how I look at it. Just looking at what Google did. It came up, got above this buy side, filled in this humongous liquidity void over here and rejected down. We opened here, went up and closed all the way below where we opened, right? That's heavy rejection. Boom, right? That may be a candidate to try to see if we're going to attack this low right down there, because this is the low that ultimately birthed that high right there, right? That's the swing low right there that ultimately birthed that high, right? So I've been going through. That's how, when I told y'all about Visa, right? When I got into the Visa calls, right? Why did I get into the Visa calls? Because when I came in that afternoon looking at Visa, right, we had gapped down, right, and we had come below this buy side right here from April 10th, right, got down into this order block and then rejected off it, and we was about to close at the high of the day. So I was like, strong rejection off of there. I'm going to get some calls for next June, and I'm going to shoot for 50%. The next day we gapped up and pang out, got my 50% in one day. Will you get it like that every day? Now, it just so happened that they gapped up. You know what I'm saying? A little sympathy move. It was a sympathy move. That same day when Apple was flying, high flying. You know what I'm saying? Visa, fintech, finance, Apple then turned into fintech. They do all the Apple Pay and all of that. Big tech, sympathy move. But that's what I've been doing, right? That's what I've been doing. I've been looking at stuff like, hey, what is this doing here? What is this doing? We've come up. JP Morgan, right? JP Morgan, we came down, right? Came down into this big humongous void here, rejected off, right? Went up, made a swing high, came back down, filled in this void right here and rejected off of that. That might be a candidate to see if we can, get some calls to continue to attack, this area up here. Is it time for the people to start showing the banks love? You know what I'm saying? Hey, they okay with high interest rate environments and stuff. Will banks thrive during high interest rate? Anybody can thrive during high interest rates if they know what the interest rate is going to be. You know what I'm saying? But that's what I've been doing. Just going through. If it looked trash, I just skip through it. If it looked like it's about to set something up, you know what I'm saying? I don't play breakouts. I don't chase stuff like McDonald's. See how McDonald's just been slow and steady. I just wave bye-bye. I don't play breakouts. I don't chase. You know what I'm saying? But it's got to speak to me. It's got to say something to me. But that's what I've been doing. Do you use the 60-day IPDA data with stocks? No, I don't. Ain't no reason why you couldn't, but I don't do it personally. Ain't no reason why you couldn't, right? Because it's just identifying where the money resides. The look back is just identifying where the money resides. Where are the lows and highs in those time frames, and in between those time frames, where are the PD arrays? Where are the imbalances? Where are the, it's just looking for the where the money resides. Yep, the look back and forth. Yeah, the forward, looking forward is just that's like you're speculating the possibility of what, I'm saying, within these amount of days you can anticipate a raid on this liquidity. Within these, you know what I'm saying, you're speculating, within, it's giving you a defined window of time where you're looking for this to happen forward. You're looking back to see where the money resides, and then you're looking forward with a defined amount of time to say, hey, within this time, I expect us to attack this liquidity. Do this. Once we attack that liquidity and it show you it want to continue, we're going to attack this. If we attack that liquidity and reject, this is to the other side. But you can use it on stocks too. Ain't no reason why not. Because it's all about where the money reside, where the money reside, where the money reside. That's it, man. That's all I got. I've been on here for an hour and 17 minutes. I appreciate y'all for hanging out with me, man. Hey, y'all know how I like to end it, man. Take advantage of the day while you still can. Do not put off till tomorrow what you can say today. Meaning, if your loved ones are still here, take advantage now. Express your love to them. Don't just say it. Don't just show it. Say it, show it, and confirm it. Open up the lines of communication so that they will know how to express love to you, and you will know how to express love to them. Because one of the worst things in the world is to be just pouring your heart and soul out, and the person is not receiving it because you're not speaking their love language. So open up the lines of communication so that we can have effective communication, and everybody will be in a better place. If your parents are still here, if you are blessed enough to still have your parents with us, especially if you got both of them. But if you only happen to have one, like myself and many others, call them up. Take advantage of today. Let them know that you love them. Because somebody's tomorrow is not going to come. Maybe yours, and maybe theirs, because ain't nobody promised tomorrow. But take advantage of today while you can. Why do I stress this so much? Because I have lived with regret for many, many years, and I don't want anybody to live with that same type of regret. So I just encourage you to take advantage, because life is too short. Life is so many crazy things happen. So many crazy things happen. And sometimes it's not the crazy thing. It's just our time. We can be on our deathbeds. And when our time comes, our family members, the pain will be just as real as if we were just taken away in the blink of an eye. Nobody's really prepared for death. We say it all the time, but it stings nonetheless. Hey, I appreciate y'all, man. Thank you for pulling up. Thank you to everybody who's been supporting the channel financially. Thank you to everybody who has been clicking on the Apex link. Thank you. You far too kind. If y'all ain't got enough stock talk in you, y'all pull up and check out Trapping Tuesday. That's about the best financial podcast that's on Al Gore's internet right now. Trapping Tuesday. I ain't gonna hold you. Trap be dropping some information. It ain't, it's real stock market information. So y'all pull up and check that out on YouTube. Wall Street Looks Like Us is the YouTube channel. I'm gonna go watch it myself and figure out what I'm gonna eat for dinner. Appreciate y'all, man. I see y'all in the morning at 9 o'clock for the overnight price action. Enjoy your night. Enjoy your dinner, your family, whatever you're gonna do. Go on, man. Yeah.